Welcome to Trading Lounge and the Commodities Report, and I will be using charts of our other analysts today through this video. So with Bitcoin here, there's two counts that I've got and they're both bullish. So this one here where we've got wave 1 and 2 here and 1, 2, 3, 4, 5 here. So this 1, 2, 3, 4, 5 here, I took that off our analyst that does the crypto. I'll just go into our chat room here and oops, daisy, not that one. It's into crypto here. And yeah, so I thought this was quite a good idea actually, this chart here, configuring it this way with 3, 4 and going up for 5 here with 1 and 2 and 3, 4, 5 finishing up here. Okay, I kind of like this a lot because it fits in with this particular pattern, this particular pattern here. So this is our sort of favorite setup pattern. So if this is 50,000 through here, coming up here for this reaction from here, and then pushing up here, and then having the ABC. So we're in this run here. So yeah, it just makes it, this is how a market normally migrates from being resistance to support. There's not very many patterns it can do. It can do this one and this one where it doesn't come back below the level. So it's possible that it could do that one, and I'll talk to you about that in a moment. And this one and this one here where it doesn't stop over the level here, but it goes up and then comes back down. So there's only really 3 basic patterns that can occur. So we've either got this one or we've got this one here. So in this instance here, this would pull back. This would be the arrival, the reaction, and the first high above the level. So just looking at it like this, the arrival, the reaction, first high above the level, and some type of correction here. So that's what we could be looking at here. So there's another little push to go to the upside there. I won't go to the intraday at the moment. I've got to get through a lot. But yeah, that's one way to look at it. The other way to look at it is a bit more bullish, and that's putting wave 1 here and wave 2 here. And then this move over here would be wave 1 to this point, and then coming back for wave 2 here. So in this case, it doesn't really, it could spike below the level, but doesn't really have to. It would be more like this pattern here. So this would be up for wave 1 here, ABC back for wave 2, and then pushing up further. So coming back and finding support on that level. So we'll work through both of them, but they're the two counts, and they're both bullish. So don't really need to do much at the moment on this. It's all looking pretty good at this point. So I will just leave Bitcoin at that stage there, and we'll do those updates each day. And yeah, so let's move over to the other commodities. Now I want to basically put forward a little story here. So this is the 10-year yields, and it basically following the dollar at this point, and this is a weekly chart. So we've been looking at this. This is on log scale, by the way, as well. So we've had our 5 waves to the upside here, and in Elliott terms, it's coming down from the 1982 high here. So we've got 5 waves up to 5%, 5 being the second strongest number. We're seeing a reaction from there. We're looking for an A wave, a B wave, and a C wave coming into play here. And once that's completed, then we'll see another 5 waves to the upside. I'm not an economist, but this is what tracking Elliott Wave would look like here. It could pull this far down, doesn't have to. Normally I find there's some sort of relationship between this length of wave A and wave C. So coming down to the lower end of wave 4 here, around the 3.25 would be probably about right. But yeah, we just got to kind of take on board, you know, all the possibilities as such. And with this weekly chart here, obviously the bonds are doing the mirror opposite. So while the yield is moving up, we're seeing the bond move down, and we'll see this situation here where we'll see the A, the B, and the C wave here. So an A wave, a B wave, and a C wave, and then continue down at that point. So now if we look at these two here on the intraday level, which on daily level, we'll do that in a moment, because that will tie into the dollar here. And then, you know, this dollar obviously ties into the commodities as well. And, you know, there are currencies like the Australian dollar, and we'll have a look at the count for this, and the Aussie dollar and so on. But I also want to bring in China as well. Now, we've had a look at this before. This is a monthly chart here, and yeah, so anyway, so it's a monthly chart. So we've got this we've got this pattern here, which is an A wave, an ABC for the B wave, an ABC for the C wave. So we've got an Elliott wave triangle here, and it's pretty nice and simple. And you know, we've been waiting for it to move down here. It has moved back up. It, you know, they've had they've come back from their Dragon Year holiday, so we'll see how that sort of plays out. But I would suspect is that when, or if, let's say, if this market finds support back on the 3,000 here, then this correction is finished. So we'll go from a monthly chart down to a weekly chart. And this is pretty important for the commodities. You know, I mean, China have been developing, you know, certain mines, certain minerals mines in different countries, and so on and so on. So it'll be a bit of a different landscape when they come back from their bull market. But the A wave, the B, the C, the D, and the E over here. So it's a triangle, so they all operate in three waves. So we can look at this down. I could look at this in a couple of ways, or could also put wave A here as well in this instance. It doesn't really matter, but from wave B down to wave C here, I think we could be done and dusted here now. Wave C, E, or 4 here. So counting 5 waves down here. I did have a bit of. I have been keeping a bit of an eye on it, but I haven't actually really done enough work to say this is this and that's that, and this is how it is, and this is what we're going to do. I haven't sort of done that yet. I just, because I'm busy, but I just figured that when we see this 3,000 become the support, then we'll know that the market's low is in at this point. So this could also be a wave 4 over here at this stage, and we have one more low to come in on the daily. It's quite typical to see strong volume on the low of wave 3, so we could have this over here and have one more move in here. I will do some work on this, but this is important because this will tie into copper, any commodity dollars, you know, the loonie and the Aussie and all of those sorts of things. So there's different ways to view it all, but let's just see how we go with this here, because, you know, I've been keeping you up to date with the whole thing all the way through, and now we're getting to here. There's a possibility that we've got a low in here, and it may even be the case. We'll see at this point, but getting a classic trading levels pattern on top of that 3,000 like this here, that would tell me that China is ready to go at that point. And, you know, being a contrarian situation, you know, everybody's been bagging China. There's been a few people saying that it's sort of coming back or whatever, you know, but for us, support on that level there would be good. And that's obviously going to put in, you know, it'll help us go long in, you know, BHP and so on of the world. Okay, so all these things here, the yields tie, you know, it's all about the interest rates, all about the money. So the yields and the bonds are tying in together here nicely. So we've got, now what we've got to do is we've got to tie this and this in we're looking at it on a weekly level here. So we're going to look at this here on the yields here, this move up here on a daily chart here. So when we look at this on the daily chart here, you have to excuse my, might need to go to another thing, but basically we've got the A wave here, then an A, B and C wave up here. So it's a little bit sort of messy, but just bear with me a second. So we're looking for 5 waves in here, and the last few times we spoke, we were looking for wave for this and this and this. So I think that, I'll just move it. I think that we've still got another move up here to go before we turn down. Okay, so that means that while this is pushing up here, that means that the TLTs will on the daily, so it should open up on the daily, yeah. So this here, we can put that as wave A here as well, but it doesn't matter. The main point here is that we need basically this length here to come down here in a way, something like this here. So it's been coming down, you know, it's you know, obviously it will sort of flutter around the old low and those sorts of things. And but yeah, so yield here needs to go up a little bit. So then the yield needs to go up here, because this is, I've counted this before, this is 5 waves here, so 1 and 2 here, then 1, 2, 3, 4. Actually still look for the top of that third actually, and then the fourth. So it's got a little bit more to go here. So that means that the US dollar can also push up here further, you know. So if this took 1, 2, 3 days here, so wave 5 could take 3 days, and then if we still need to go wave 4 there, that could be another day to another 2 days to the top here. So it's 5 and then wave 4, so 5, so could even be 2 weeks before we get up here, right? So 2 weeks before we top here, 2 weeks before we get this low in down the bottom here, which is 10 trading days, roughly. Just take that with a pinch of salt. And that means that if the yields here are pushing, need to push up here a little bit further, that means that the dollar's going to push up here a little bit further. So currently, we can count this this can be counted in 3 different ways to the upside for wave 2 here, or wave B. If we look at some nicer, cleaner charts for a moment, let's just have a look here. We'll just come back to the Aussie at the moment. We'll just have a look at the dollar index here. So Malik has got this wave 2 in play here now as a WXY here, and that, like I said, there's 3 different ways to count this up here. So we cannot confirm that that this top is in place just yet. We'd need to see this trend line here breached at least. We would need to see 5 waves down here, and if that is the case, then we can look to short this 3rd wave down here, and that means that we could also go long on the Aussie, but we don't know if that top is in place just yet. You know, this is the weekly chart here, so a bigger, you know, a bigger picture to the downside, and this is, you know, like I said, it's important for it's important for these commodity dollars like this one here as well. So this is the daily chart here, so we can count quite clearly 5 waves to the upside here, and looking at this move to the downside here, calling the low in here. So yeah, we're looking for long trades here, but because we don't know about the dollar yet, the yields need to push up, so the dollar could push up, so we could actually get one more low in here. If I go to the 4-hour chart, we could get a push up and one more low coming down to the low down here first, because this can be counted as 1 and 2 here, right? And then 1, 2, 3, 4 and 5 down here for this as 1 and 2 and 3, 4, 5. So this could be like 5 waves coming down here. So it can be counted differently. So we're not quite, don't quite have that sorted out just yet. Okay, so but we're getting there on that. So yeah, basically I can't get the turn on the currencies because I can still see the yield here needs to push up a little bit further. So this is what's holding us back moving into the markets. But once that's done, then we're good to go. Okay, so that's the dollar, the bonds and the yields all working together. Now, of course, gold works with the dollar as well. So if the yields are going to be pushing up, then the dollar's going to push up, and that's going to place pressure on gold. So when we have a look at the gold charts here in commodity, this is the 4-hour chart. Let's go down to the daily here. So we can still see that there's pressure on the there's still pressure on the downside for gold, while the yields need to push up and the dollar needs to push up. We're getting a rally here, but yeah, until it, I wouldn't turn bullish on this until we see a lot more come into play at this point. So that's, keeping the pressure there as well. I'll just have a look at silver as well. Silver's here. So yeah, there's still a slight down pressure for this larger triangle pattern on this daily chart for silver as well. So we're not ready, even though it's tempting to go at the moment, there is a case for going. It's just not, we just need the bigger markets, the money, the interest rates behind us before we can move on these things, so that's that in a way. And of course, when we're talking about China and commodities and the Australian dollar, well, then we need to look into Dr. Copper as well on this, and it's also still under pressure to the downside here. When this will be the US futures on copper here, but when you look at you could there is a case for counting 5 waves up here. Not a strong case. It would be 1 and 2 here, and 1, 2, 3, 4, 5 the third, fourth, and fifth here. But on the LME where they trade more, then it's quite clear that this is a corrective pattern to the upside. So we're in a very complicated 3-wave pattern in this particular point. So yeah, as the analyst mentions here, that until this is breached to the upside, or we see a stronger impulse wave to the upside, we can't really go on this just yet. But we could, it could possibly go at this time, but because my theory is that they'll all turn at the same time, they'll all work off each other. But things do move out of sync for a week or 2 weeks, and we've seen that a little while ago with gold and the US dollar. So it's quite possible that some of these markets could end up just leading off, but I don't have enough confidence in the structures to say that at this stage. Okay, so that brings us over to copper, and the same thing. I don't need to see copper here, but iron ore as well. Let's just see. That's obviously broken through here now, so we've got a much deeper pattern coming into play here now for iron ore, and that's obviously not going to be good for Rio and FMG and Vale and so on. So I think we would have made the error here as well. Oh no, he's all over it. So yeah, we've got this moving down here further. So yeah, we'll just see how this plays out here for this. I can see another way to count this as well, but I won't confuse the issue. So that's there. And while we're here, we'll just have a look at, since we're just showcasing our analyst work, we've got a good handful of people helping now, which is fantastic. Uranium is the one that we wanted to have a look at here as well. So with this one here, we've got uranium, we've got wave 3 here with an ABC pattern here. Yeah, pretty much the same. In this instance here, we've got wave B and wave C coming up to here. So wave 3, 4, and 5 and finishing there. But I've got the feeling that we've got a bigger picture unfolding here. So all of these 5 waves here will make wave 1 up here and pulling back for wave 2 and taking us higher into higher levels at that point there. And while we're here, we should just look at have a look at crude oil. So what is crude here? Perhaps next time we'll have a bit of a look at some of the others as well, some of the grains and softs. So yeah, so in this case here, this is pretty much standard how I've got this as well. A bit of a push up into the 61.8%. The thing here is this little move here could be counted as wave 1 here and 2 here and 3 here and 4, 5. We are actually long in ExxonMobil in stock, so we'll trade that up until this point and have a look at that stage. But I've got this here slightly differently. I've got this as wave 1 with a wave 2 pullback at this point. It doesn't really matter. We'll still end up at the same place there. And so it's all good for crude oil. And on the natural gas side of things, we're still edging lower on this, so just on the bigger picture here. So yeah, it's the same count I've got as 1 and 2 and 3 and 4 over here. The wave 4 didn't quite come back up to 38.2%, but yeah, 1 and 2 and 3 and 4 and 5. I know these got this going into negative territory here. It's probably not the case, but we did see it with crude oil, but coming down further into the dollar area is probably the way to go at the moment. So we're way down here at the moment at 120. This is NYMEX crude, I'm assuming, and so we still got further to so when I talk about a dollar, I always talk about the group 2 below it and group 1 above it. So from $1 to $1.30 in that space, that's group 1 above, and below that will be 80 cents, 72 cents, and 65 cents. That's the support. That's the range when we're talking about the dollar here. You could probably count this a little bit differently as well, but I think as far as it stands, I think it's pretty good. So that's where natural gas is, and I just want to have a look at some of these for myself, actually, just some of the softs here. Okay, cocoa's doing quite well. Still got further to go up here. Could look to get a position in this on this pullback here on the daily chart. That's here, and that's around the 5. It's still a bit, hopefully it drops a bit lower and we can work with this number. We'll just keep a bit of an eye on that. I'll check on that. And how's coffee going? Coffee is, we've traded this in the last trend to the upside. Okay, so this has also got a nice little move coming up here as well. So we'll look at calling that a trade. I just don't like trading before large numbers like the $200 mark here, do you know? But this would be, in the terms of the trading levels coming across here, this would be the arrival, the reaction, and then the first high above the level. So wave 1 and 2 here, and then 3, 4, 5. So we've got a fair way to go up. We'll probably end up at 210 to 220 would be about right for that move. So we can look for a trade there, and we've got the portfolio working now for the commodity, so that's good. I'll just have a quick look at corn while we're here as well, and don't particularly want to short that. It's a bit late. That should have been done at 440, so that's okay. Very much like this drop here and this pattern here, very much like natural gas. That's interesting. And what else we got here just while we're here? Soybeans and wheat. Let's just have a quick look at these while we're here as well. See if we can look for a trade here. We don't want to get involved in wave 4, so we'll leave soybeans alone for a bit, and let's just have a look at wheat, which obviously there's been a shortage. I know that the Ukraine have been trying to do deals with Australia to get their grain, so it's interesting to see this moving down here. This reminds me of nickel, actually, this particular pattern. That's interesting that the prices are so low. Yeah, well, it's interesting to point that it's just about sort of completed, you know, completing this whole move down through here. So if that's the equinox top here in March, we should see this as the low down here on the equinox around the 20th to the 23rd. We should see that low in March there. Okay, so I'm just going to leave it all at that. I just wanted to sort of have a look at some of the markets that we do with our analysts now. So we've got 5 or 6 analysts with us now. We're going to keep building that as well. And yeah, alrighty. Thanks for tuning in. Cheers.